Democratic House Insurance Committee. Also, I was the sponsor of the bill that created this task force, originally introduced by now Senator Senacero in the House several years ago. And I'm happy to be here and to get the help for our communities and for communities and residents throughout the state. Thank you.
Commissioner, the sound's running again. If you wouldn't mind making the announcement about the recording.
Okay, the sound is back on. So for the conference call attendees, I will, for the first time, because it's not reminding you, but ask you to mute your line if you are not speaking. We will try to identify ourselves around the table as we are speaking, so you can follow along. But please note that the meeting is being recorded. So participation, you acknowledge that it's being recorded, and we will make our best effort to get the recordings on our websites after our meeting as quickly as we can. I think staff will put in the Flood Task Force website into the chat where all of the material, comments, and otherwise are available. So with that, I'll turn it back to Representative.
Okay, thanks, Commissioner Humphreys. So I'm Representative Dave Zimmerman, representing the northeast part of Lancaster County and southern Berks, and very much a farm community, and with some of my agriculture backgrounds, also have served on an insurance company board for a long time, and I realized that, you know, this whole issue of flood insurance, you know, too many of those properties have been devastated too many times, and so how do you charge enough to cover the needs and all that, you know, in the long run? And also, I get real concerned about some of our farm community where, you know, they have the farm and the farmstead, and maybe there's one outbuilding that's partially in a floodplain and the rest may not be, and so they complain about the high insurance costs. And so, you know, the whole question of, you know, what is a fair pricing for any of these settings and so forth. And it had an opportunity just the other year to be upstate looking at where some of these streams and northern Pennsylvania has a little bit looser soils, and so those soils get washed underneath bridges and they pile up, and after a while the bridge gets washed out because of it, and you know, because the waters are going around that bridge, and ultimately it'll wash out the bridge if nothing's done for repair. So things get, you know, very costly related to, you know, some of our flooding issues. And so I'm very interested in, you know, what's on the table for today, and hearing, you know, some of the conversations that we'll have. So looking forward to it. Thanks for the invite, and good to be here.
Senator?
Thank you, Commissioner, and thank you all for participating in this, and my colleagues in the General Assembly, obviously. You know, 10 years ago, when I first started looking at this issue and ultimately drafted the legislation that was the precursor for what was passed and signed into law by the governor, and I want to thank my friend and colleague, Perry Warren, for taking this issue on after I left the House and continuing to push for the passage of the bill. The main impetus of our interest was the fact at the time that it was not long after the federal government had pulled back on subsidies for flood insurance. And at the same time, FEMA at the federal level had expanded the flood maps, so that many of our residents in the Yardley and Upper Makefield area at that time in Bucks County found themselves in a position where they were suddenly in a floodplain, but they didn't have the wherewithal to pay for flood insurance because there was no subsidy, there was no help. The more recent, you know, events, these more severe storms that are kind of bursts that happen in a shorter period of time, such as the July in the Washington Crossing area that took 7 lives. That's a more recent phenomenon, but as we were discussing before the meeting today, something that I think we're much more likely to be seeing moving forward. So that just makes this issue all the more urgent for us and ultimately the General Assembly and the administration to address head on. So it's timely, obviously, that we're here to discuss this. And from my perspective, again, going back to those original efforts 10 years ago when we had town meetings and we brought people in and we heard their stories, is that we come up ultimately with a plan that certainly incentivizes municipalities to make the changes that they should make to help mitigate flood risk in the future. Things like low impact development ordinances, the things that will work to help recharge stormwater on site and for it not to become a problem further downstream. And perhaps tie that to as an incentive program that might make some state funds available to help folks deal with the burden of flood insurance. Certainly, the piece that I think was that the commissioner talked about before, which is just making people aware of the fact that there are these options out there, that's critically important. But then if we don't then follow it up with some kind of assistance, we're really not moving the ball too far forward. We really need to be in a position where we're helping these struggling communities out. And it's not just in Bucks County. I mean, Perry and I represent an area that's had a lot of these flooding issues. My district is one of the longest stretches of the Delaware River in the state Senate. And every one of the towns along that river have these issues, but it's not just the Delaware River. It's a lot of other streams and tributaries. And if I was saying before, when we first started looking at this 10 years ago, we had a map of the Commonwealth that had all the streams and tributaries of the state laid out in it. And it was kind of hard to find dry land, honestly. This is a problem that is particularly acute here in Pennsylvania. So if we're able to do our job in a way that hopefully provides the legislature and the administration with guidance as to a workable plan moving forward, that I'm sure the residents of the state would be grateful for. And I'm excited to be on this task force and look forward to working with all of you. Thank you.
Thank you. Senator?
Thank you, Commissioner. I'm State Senator Lisa Baker, and I represent the 20th Senatorial District, which is Luzerne, Wyoming, Susquehanna, Wayne, and Pike counties. And I have territory along the Susquehanna, the North Branch of the Susquehanna, and the Delaware River. We have certainly been impacted, Director. We have been in constant communication, as you know, over the years with microburst storms, with large flooding events, with significant challenges within that area. But I also have colleagues across the Commonwealth who are interested in affordability and accessibility of flood insurance and how we respond. I want to thank Senator Sanacero and Representative Warren for their work. In September, 2 of my counties were devastated by a microburst storm, Wyoming and Luzerne County. It blew out our entire Luzerne County fair right in the middle of it. And so I think as we look forward, I hope that we can craft some policy changes and also go back and look at the bill that I introduced in 2014 to create the Small Disaster Assistance Program when Pennsylvania does not meet a federal threshold to allow for resources for public infrastructure. And there are some who suggested it should go beyond just public infrastructure. The opportunity to represent the Senate very important, and many people have already reached out to be in touch about their concerns. So we look forward to the testimony today. Thank you.
Very good. Thank you all. And with that, we will start the presentation with Bill Bradfield from FEMA. And for board members, we all have the slides in the folders in front of you. For those listening, I believe we're going to try to make the slide decks available online.
Commissioner, do you want to allow for the public comment online again, since now their sound?
Are we advancing our slides? I just say next slide.
We'll get there. The next slide. Okay. I'll come back.
All right,
I appreciate the opportunity to be here today. My name is Bill Bradfield. I am a flood insurance outreach specialist at FEMA Region 3. I work in the mitigation division in the floodplain management and insurance branch at Region 3. Coincidentally, prior to my stint at FEMA, I worked at FEMA as the NFIP coordinator for the Commonwealth of Pennsylvania. Tom Hughes, my boss. Randy was all of our bosses. I grew up in Pennsylvania. I live along the Susquehanna, just north of here. I'm north of the Lewisburg area. So, it's actually, this is a really nice opportunity to be part of this because this is something that it's kind of my home state, something I'm passionate about, but I've also had a chance to be on the ground. I was at all 3 disasters this summer doing damage assessments. We hear the stories. Dave and I have communicated often about the misinformation that we hear when we're out talking about flood insurance. So I appreciate this opportunity. What we wanted to do, I think.
So you're welcome to sit down if you want.
Oh, that's
you don't
kind of a mover.
You don't need to feel like you need to stand.
Is my moving bothering anybody? Is that?
No, you're welcome to stand. I just didn't want you to feel like you couldn't stand.
No, that's fine. I do this off.
Hold on 1 second.
Yeah, sure.
We lost your slideshow for a second.
It's all right. Just keep riffing, right? So we had some initial discussions here. I thought there's so much to insurance. Speaking about the NFIP, only 15 minutes. I kind of wanted to get an overview of just where we're at in Pennsylvania with the National Flood Insurance Program, very high level, and then we can decide where we want to take some of these things in the future. So that's really the approach here. And we can go to the next slide.
No, you get it on you. Yeah.
Bear with me, Bill. It's on my screen, just not yours.
That's fine.
Why don't you tell us a joke?
Why do Swedish ships have barcodes on them? When they return the port, they can scan the Scandinavian. I have a 13-year-old and an 8-year-old, all right? Dad jokes to the limit of it.
Someone's got to fix that screen quickly.
Not enough here. That one always gets my wife, though. I can just say that in the middle of nowhere. Shelf tears coming out of her eyes.
Take this opportunity to get some water. Is that?
Oh, yeah, have at it.
Always an adventure.
There it is. Now it's sharing progress.
Yeah.
No.
Okay, there we go. That's the second slide. All right. If you can see enough of it, I'll just continue with this slide if you want to just work through. But I think we need to start a discussion overall with why the NFIP, if you're not familiar, because I know we probably have a broad background of folks in here. National Flood Insurance Program was created by the government in 1968. It was at a period when there's been a number of significant natural disasters, and they were finding it more and more difficult to have properties insured in those high-risk areas because all that was available was the private insurance market. So they created the National Flood Insurance Program, at which point the government stepped in and said, look, we will make insurance affordable that's backed by the federal government, but we're also going to ask that you have to abide by some minimal standards, minimal requirements, but we'll also map that flood risk for you. It's a quid pro quo program, as we like to say. We'll give you the insurance, but you got to adopt minimum requirements, and you have to enforce those requirements. We do provide to homeowners, renters, and business owners. Renters is a big one we're trying to make inroads in because we always hear issues. Renters aren't even aware that they can get flood insurance. There are two ways to get the NFIP. You can get it directly through the NFIP, for the NFIP Direct, or the Write Your Own. They are the private insurers. They service NFIP products. It doesn't matter. It's the same thing at the end of the day. The cost is the same. It's just a way to spread it out a little bit more. I wanted to highlight down here because I think this is going to be a crux of a lot of what we're going to talk about as we go through this. There are over 22,000 property or communities participating in the National Flood Insurance Program nationwide right now. Of those, Pennsylvania has 2,480. As of last week, I pulled the data. So we have over 10% of all the communities that participate in this program in the Commonwealth because of land use law in the Commonwealth. Oh. The last bullet point that I will add, though, is I think we're around, of all of those communities, only 38 do not participate in the NFIP. I think that's remarkable for the size of the Commonwealth that we only have 38. I will say in a lot of situations, we've reached out to those communities. They barely exist, if at all. It's a name on paper. So some of them have been suspended from the program for various reasons, but for the most part, they are not really a high-risk area, but something we can work on. Oh, okay. There we go. Yeah. 36 are not participating. 11 are suspended. So, we talk about getting those back in, but that's something that we worked on. All right, next slide.
Bill,
coming up.
Are you
Keep
comfortable
going.
with questions as you go?
I am 100%, yeah.
I'm curious, I think you said they were a small community, the 36. Do we have an idea of the total population or size of those 36? Because my understanding is you would not be able to buy flood insurance in one of those communities today.
You are correct. Yeah, you would. Yeah. We could look that up. We have all the data. We have what we call a community status book that has information about who's participating, who isn't. So I think in coordination with some GIS, we could pull a population up. I know one of them, I think it was the incorporation of like a hunting fishing club in Allegheny County out in western PA. They barely even exist other than maybe a couple temporary residents. But yeah, if you are suspended or not participating, you do not get NFIP insurance. It is not an option, which also precludes you from certain levels of federal disaster assistance, which we'll get to on the second.
And just for members, if you have a question, you can just turn your name tent up, and I think we'll just call on questions as we go, just because we have, I think there's so much information in here. If people have a question on slide 3, I don't want them to have to wait until the end.
No, I would agree. I think that was one of the challenges when we put this together. There was so much we wanted to cover in so little time that we tried to hit high level. So please feel free to ask questions as we go.
Okay, thank you.
Yeah, so I want to highlight, I think that this is a disparity that we need to get out to the public more for awareness, the difference between flood insurance and disaster assistance. I don't want to go through all these points. The big takeaway here is that if there is a flood event and you have flood insurance, I will be speaking about NFIP because that's our program. There is a private market out there. We're all one big happy family. We just want folks to think about insurance. So, I speak NFIP. It doesn't mean that I don't believe in private. But if you have flood insurance, you have a flood, you make a claim, you get your money, you move on. That is what will make you whole again. Not alone, you don't have to pay it back. I also want to point out here, last year for Hurricane Ian, the average claim was $78,000. That's pretty significant. On the flip side, we have the disaster assistance, and this is when everyone says, oh, FEMA comes to town and they hand out money. Well, as we've seen, unfortunately, 3 times in Pennsylvania this year, we didn't get our disaster declaration. We had significant damage. That's really challenging, but we're seeing these hyper-focused events where we're not getting these thresholds, we're getting the damage. So when we don't get the disaster declaration, we don't have that assistance available. We don't have the grant money. We don't have the loans. We may meet the threshold for a small business administration loan, but in that case, it's a low interest loan. And when you're talking to survivors, the last thing they want to hear when they've lost everything is that they can also now take out a low interest loan. So it's really trying to dispel the myth that you were going to be made whole by the government if you have an event. And on the next slide, I want to show real quick some numbers that we pulled together for some recent disasters. Just to put it in context. There we go. What's interesting here is what we're looking at is the individual assistance declaration. So we don't have many in Region 3. So we actually had to go way back, even find the last couple. We have West Virginia in 16, Virginia in 16, and then here's Ida in 2021. The big takeaway from these slides, the disparity here, is that the average NFIP claim during Ida in Pennsylvania was $45,000. The average individual assistance, if you qualified because of the disaster declaration from FEMA, was $2,300. So if you have 2 homes side by side, same amount of damage, one had insurance, one didn't, these folks got 45, those folks $2,300. It's not going to work. It's not there to make you whole. This is why insurance is important. Okay. A little bit by the numbers for Pennsylvania. So right now we have 44,821 NFIP policies for a total coverage of about $10.8 billion. Match it up to historic claims. We have 76,000 claims. Going back to this data goes back to around 1973 for a total of $1.4 billion paid out in claims. I also want to mention that as of the most recent data that we could pull, we have what we call penetration rates. How many policies are in what we also call the special flood hazard area? That's the 1% annual chance or the 100-year floodplain. We don't use 100-year floodplain anymore because everyone assumes that if they had their 100-year flood last year, they're good for the next 99, and it's not the case. We've been back to a couple areas already that have had multiple 100-year events. But the penetration rates right now, in the special flood hazard area in Pennsylvania, we're at about 22.8%. So about 1/5 of the properties of the structures in the floodplain have insurance through the NFIP. Statewide, it's less than 1% of all the structures, 0.8%. So it's low.
How are those compared to like national averages or compared to other states?
That's a great question that I think I can get our GIS folks. I pulled these from our dashboard, but I think we can look at that. We have a very proactive data analytics group that does a lot of these numbers for us that might not be available for other regions easily, but we can get it.
Thank you.
All right. On the next slide, this one's going to be a little challenging because it's a darker slide, but this is something it's a public-facing. I put the link in here. If you do get the slides, you can click on the link and go to our mitigation page. But it is a map of NFIP policy penetration rate by county. We get there. That's just a screenshot. It can be a little challenging, but I think it's a nice graphic when we get it, just to show you where we're seeing more policies, more exposure to the floodplain, less policies, less exposure to the flood. So here it is. So I apologize for this size. This is the new trend to kind of go camouflage with a lot of the GIS because it's looking at 2 different data sets. But basically, in the purple areas here, you have low flood insurance policies, but high amount of properties in the floodplain. I will say down in here, traditionally, we have a mix. We have a pretty fair amount of properties in the floodplain, but these also tend to be our more affluent communities, so we also have higher insurance numbers down there. So I think the big takeaway here is, going back to the comment that, the Pennsylvania rivers and streams map look blue. I've heard that, we have more rivers and streams than any other state beside Alaska. But the big takeaway here is outside of some of these larger areas, we don't have enough flood insurance and we have very high risk. Okay. This next slide I hate to show, but I think it's important for this conversation. The what?
Don't jinx us.
It knows it's coming. So unfortunately, this is NFIP policy trends in Pennsylvania. We can go back, if we'd like to, we can take a more holistic approach. I only went back a calendar year. This is the public-facing information that you can find on our website. I tried to stick with all public-facing information twofold. One, because anybody in here can go see it and look at it, but also because of current litigation, we have to be careful what we can share outside of what's in the public realm. But the overall trend in the last year is not much different than we've seen the last couple of years, that we're seeing a decline, a pretty steady decline in NFIP policies. There could be a number of reasons behind it. I'm sure that's something we'll talk about in more detail. I don't want to go in. It's not necessarily a bad sign because these can be converted to private policies. So, we want to make sure that we're comparing apples to apples. But yeah, we've seen about a drop in 2000 policies around 4%, which is kind of standard. So the other thing that I think is interesting and a takeaway here, when we get to like July and August, where we know we had significant flooding events and disasters, we don't see any uptake. There's no blips that correlate to big events. Be interesting to go back and maybe look at like a Lee Irene type of event. But I did want to put that on there because we're very cognizant of this fact that policies are declining and we want to improve that. I'm glad I put this slide in because it was mentioned about repetitive loss and severe repetitive loss properties. It's a definition slide. It's not super topical, but I only want to point it out because these properties are repeat offenders, but they also are going to be negatively affected in their insurance premiums because of that. So I think any conversation about insurance affordability, we have to target those properties that keep getting flooded, that keep getting the payouts, because also if they sell, the next person coming in is going to be paying higher insurance premiums as well because of that. So real quick, repetitive loss, if you have $2,000 claims in a 10-year period, we consider you a repetitive loss. That's a pretty low bar. Severe repetitive loss, if you have $4,000 or $5,000 claims, or you have two separate losses exceeding the current market value of the structure, you get bumped into the severe repetitive loss, you get put in a separate bin. Your premiums go up. You can only get insurance through the NFIP, not the Write Your Owns. These are the ones we want to get. And I know Tom, when he goes, he'll talk about these too, but these are the ones with the insurance. There are incentives to mitigate these, through cost sharing that I was stealing your thunder, but I wanted to highlight these. But also I wanted to point down here that we now have a previous claims factor that's come in as a result of the new premiums or the new pricing methodology, that they look at a 20-year window and they'll look at the number of claims you have in a 20-year window. And that will be factored into premiums as well. So again, the takeaway from this slide, continued histories of claims has a direct impact on premiums. And I think this goes back to a bigger conversation. If I take my insurance hat off and I put my floodplain management hat on, this is where we need to talk with our municipalities and our communities because we need better sound floodplain management to keep them from developing, redeveloping in the floodplain because you're only perpetuating this loss cycle. And insurance is not affordable, but it's not affordable because you're putting people in a high-risk area. If you don't put them in there, then affordability is not that big a deal in those areas. Okay. Here's some numbers real quick. For severe repetitive loss, we have 8,429 repetitive loss properties. Of those, 1,200 are severe repetitive loss. That's a pretty significant amount. Not surprising for Pennsylvania, because we're an old state. We have a lot of development along our rivers and streams because we were tied to the transportation. In terms of total repetitive losses, we have 25,000 and change. 7,000 of those are severe repetitive loss. So you can see they're carrying the majority of the losses here. Total payments, $758 million to these properties. So these are properties that have been flooded at least twice, sometimes multiple times. So I think it's important to have this discussion about these properties and how do we address those as we move forward. We can actually skip through. I'm going to just pass over these two slides real quick. Tom's going to talk about that one. If anybody wants to have a discussion about how insurance policies are now rated with FEMA, our new pricing approach, used to formerly called risk rating 2.0. I'm happy to have a separate conversation. I don't want to go into details there. That's also the crux of some of the litigation, so I'm limited on what I can say, but I'm happy to have that conversation. But we can go to the next slide. Next one, I'm sorry. Okay. The affordability framework. Now that we've looked through the numbers, I want to tie into where are we going with this. So there's been a lot of questions about the NFIP being unaffordable. It's too expensive. We're pricing people out of their homes. We made the change to the new pricing approach, so now when you get a rate, when you get a policy, you'll see your true actuarial rate. You'll know what your risk is in a much more well-defined way. However, knowing affordability is an issue, Congress tasked us with coming up with some ideas a bunch of years ago. I think it was 2018. Yep. So this is a document that is available. There's a link right there. I wanted to put this up there. That was submitted to Congress, April 7, 2018. It's a means-tested approach to talk about different plans to make the NFIP more affordable. It's an interesting read. However, as you'll see in subsequent slides, we never get far enough to have this conversation about how to implement some of this because they never extend our program any longer than a couple months. So we're always a day late and a dollar short. But I wanted to point this out because it's a great document that has a whole list of ideas about where FEMA would like to see the NFIP go in terms of talking about affordability. So it's not that it's not on our radar. We're just confined with what Congress allows us to do and how the requirements are written right now. But it's out there. I encourage you to read it. There might be some interesting ideas in there. But we can talk about that in more detail. I just wanted to put that, not many people know that this exists, but it is available. All right, next slide. All right. I apologize for a lot of text on this slide, but the consequences of a lapsed NFIP authorization. This ties into the affordability slide, the affordability framework. If you look at the top part right here, the NFIP has had 27 short-term extensions since September 30th of 2017. So anytime Congress meets and they have to pass a budget or a continuing resolution, the NFIP has to be renewed on an annual basis. They just extend us. They kick the can out. So we can't enact any meaningful change to our program when we're constantly hanging on just to see how long we have until the next authorization. So we are pleading with Congress, 3-year, 10-year, fund the NFIP long-term, so that way we don't have to worry about the money, we don't have to worry about the claims, all these other things that could happen, and we can focus on implementing legitimate changes like affordability. I wanted to add this here. We're already on our third, short-term extension since October, so through March 8th. And if this happens, if they don't extend us and the NFIP lapses, there's no policies while we're lapsed. We can't pay any, we will pay claims, that's guaranteed. No one can get insurance, no one can renew their policy. It's a real concern. So I don't want to spend too much time on this one, but I just want to say that this is one of our challenges that we have, which is why I really applaud Pennsylvania and taking the initiative to kind of push the bubble to get it beyond that, because you can see sometimes, even though we're trying, our hands are tied. All right. And with that, I want to wrap up with the community rating system, because I know Tom's going to spend more time talking about this. But if you're not familiar with what it is, I'll save Tom the time to have to talk about it. It is a voluntary program through the NFIP, where if you're community, you have to apply. But if you adopt higher standards and you have more sound floodplain management practices, you're kind of one of our gold star communities. You can collect points, and that's different points. You get a different reduction in the insurance premiums. So this is a way for a community to take a more proactive, holistic approach to flood awareness, flood mitigation, and pass the benefit directly onto the policyholders. And this is Commission. We had this conversation too. I think this is when we look at the affordability framework. There's a lot of great information in there, but we need Congress to act on it. However, the CRS program is here. It's been here for 20 plus years. So it is an affordability program that's on the books. I think we're going to see a renewed push for it. So I'll let Tom talk more about that, but I think that this is also another area where we're going to have some serious conversations about Pennsylvania being a Commonwealth and capacity. I know that there is a desire to be in the CRS program for many municipalities, but if you have 2 or 3 people that are, the secretary is also the treasurer and the floodplain manager, and they're married to the roadmaster, and the brother-in-law is on council, CRS it's too much of a lift for them. So looking at ways that we can create maybe some kind of state task force or something to help build that capacity, I think is something worth looking at. So with that, I know this very high level is my contact information, but I do really appreciate the opportunity to be here, and I really look forward to working with everyone. So thank you.
Any questions
Yes,
for Bill from the table, from the members?
I apologize for the terrible joke.
The only question I have, outside of CRS, congressional reauthorization is a historic problem. I know the agent community is here. They lobby Congress every year on it. The NEIC, we lobby Congress every year for a long-term extension. State legislative organizations lobby Congress for a long-term extension. But what else can we as states be doing? Like, are there other programs that you've seen in your region? I think you probably have another state or two that is a state-driven program that comes to mind, at least.
I think of state-driven, I know that Virginia just came up with a community resilience fund, I believe it's called. We'd have to look into that. It speaks to what you were talking about. It's a state funded to make up that interim gap between insurance and disaster assistance. But in terms of, other than that, this is a challenge. I was actually on a CRS national call yesterday where there was a lot of belly aching about a lot of these.
And you can take that back, and would be very interested in the legislation or any information that you could share following about the Virginia community.
Yeah, we'll get the Virginia one, because I know that they were doing it, they were funding it through some other initiatives, like a greenhouse gas initiative, but similar to like the fracking money, another funding source that was allocated over there. But they're starting to make progress, but they were in a similar situation too, where they had a number of disasters in southwestern Virginia that didn't get declared, but they needed the money to rebuild. So it's there.
Okay, great. And I think we are on good pace on the IT side. We have figured out the issues, so thank you very much, Scott and team.
Yes, no, thank you, yeah.
And with that, appreciate it, Bill, and we'll turn over to Tom Hughes with FEMA. It's always awkward presenting in front of your boss, Tom. So.
So now I move around a lot, so I'm just wondering if maybe I could hug the podium or something.
You can sit. You can go to the podium.
You know what I think I'm gonna say, because I like to move around a lot. So, all right, yeah, Tom Hughes. You got the our office is the Emergency Management Hazard Mitigation Insurance and Resilience Office. We just call it MERC. All right, it's a lot easier that way. We have the National Flood Insurance Program. We have the Hazard Mitigation Assistance Program. We also have the Resilient Communities Program. So with that, I'd like to level set too, but I'm going to do it on a different way. I'm going to go high level and then down, if I could. From the United Nations here, everyone's looking at climate change right here, whether climate disruption, utility disruption. We know that there's been a change. And so, the climate emergency is the biggest economic, social, and environmental threat facing the planet and humanity. Next slide. I think we all would agree that we're seeing a higher frequency of flooding events. And so, just for data and just, sciences, in the Northeast, the U.S. leads the country with 74% increase in heavy rain events over the past 5 decades. So, it's not going away. Next slide. Okay, we were talking about severe repetitive loss and repetitive loss properties here. Can you see any blue over the Commonwealth of Pennsylvania? I think we would agree here. Thousands of U.S. homes have flooded over and over again. Pennsylvania is no exception. And what we are seeing is flooding is increasing faster than we are mitigating our risk. One analyst says of the data from the National Flood Insurance Program. Next slide. Okay, let's just talk about 2023 here. As of December 8th, there were 25 confirmed weather climate disaster events with losses exceeding $1 billion, each affecting the U.S. Okay, the total cost for these 25 events exceed $80.1 billion. Okay, the costs are going up on these events. I think, Director, you talked about, and I always show this when we go out for outreach. The next slide. And I think this is something that Jeff Jumper, who is our FEMA state meteorologist in the National Weather Service, actually looked at reports that came from the various National Weather Services that service Pennsylvania since 1996. And those red dots are those reports that came out of FEMA's, that were outside FEMA's digital flood insurance rate map. So, the green ones were the ones that were in, the red ones were the ones that were out. So you can see that digital flood insurance rate map is exactly that. It's an insurance rate map. Water's supposed to, that's if everything, actually acts perfectly with culverts, with bridges. That's how the model is going to happen and everything's going to flow. Well, we know debris happens, right? We know that we talked about sedimentation. That stuff happens and that's not mapped into the models here. And so just a trivia, not trivia, but a stat here, just 1 inch of water in a home can cost that individual, that family, $25,000. Who has $25,000 in this day and age sitting around their house to do repairs? So we need to, that's another reason we need to get the insurance. The other thing I wanted to level set too on the next slide is, there's a lot of things that are going on in that floodplain. There's a lot of things that the community can be doing and the individuals. But, through our hazard mitigation planning process with the counties, we identify the risks that we have in those counties, in those municipalities. And so, once we've identified those, we then try to mitigate those. And what we can't mitigate, then we try to insure. And so there's different things that should be happening in the community, and we want to make sure that they stay in good standing with the National Flood Insurance Program, because of what was mentioned by Bill. Bad things do happen if they actually get suspended out of the NFIP program. We ran into that in 2011 where we had a community that was put on probation. And that's not the time. We don't want that to happen because they're not going to be eligible for aid. Next slide. I stole this, borrowed from the FEMA yesterday. They have their National Hazard Mitigation Association workshop, and it's kind of an annual event that they do training here. And I don't know if you guys have heard of the Fortified program. Some of the other states in the South and in the coastal areas are looking at higher standards for homes. And so here's a stat here just on insurance that I borrowed. 64% of homes are underinsured by an average of 24%. So what they did then, when they looked at a home that's $200,000, and what does it actually cost the individual family? That's $48,000, okay, that they were underinsured. Next slide.
Do we have that? You have that number for Pennsylvania?
I'm sure I could get it from Fortified. So, all right, you write that down. We can.
When I think about Fortified, generally, I think it started along the Gulf states, maybe moved up to South Carolina. It's generally thought to be hurricanes, right? It's wind more so than it is water. I mean, the resulting water, but have you seen programs designed around the water component versus the wind, or are we still just building kind of the wind capacity?
They showed some things yesterday on what the program has evolved to. And I didn't even know, like yesterday, they were into wildfires and fires. Resistant roofs and vegetation 5 feet from the building. So there's different things that, we could be looking at to make our homes more resilient. We also, in our program, need to look at the businesses too. That's that there for the business there. 75% of businesses are underinsured by an average of 40%. What's 40% to a $500,000 business? 200,000? In small businesses in my area, that would be a heavy hit there, 200,000. They're working, they don't have that cash flow. And so, in the recovery side, we see that if the business doesn't open within the 6 months, it's probably not going to open. So, we need to make sure that they're insured. I got a trivia question for you. I know a joke. All right. So, what happened? When did FEMA's National Flood Insurance Program start?
68.
68. Okay. Up there, I show when did we start here applying a National Flood Insurance Program? Next slide. 1978. Okay, so we were a little bit behind. Played catch up there. And through that, there's 2 acts there. One Act 166, floodplain management, which we handle, and then we also have the Pennsylvania Stormwater Management Act of 1978 that we work with DEP. And so we do a lot of work in a floodplain together, but when it comes to floodway, we have to work with DEP on that. And so we're seeing some things that are happening in the floodplain and floodway that we need to tweak a little bit too. So if we could get those things fixed, that we're going to see lesser impacts to individual homes. Okay, so 2018 was our 50th anniversary for NFIP. All right, next slide. I was asked, how do we interact with the floodplain managers? And you saw how many communities were up there that participate in the floodplain area. We have also building code officials and floodplain managers that assist communities. And so we need to help them through community assistance visits where we work with FEMA, community assistance contacts, and general technical assistance. So we do a lot of phone work, a lot of material that goes out. After each and every flood event, we send something to the emergency management coordinators on things that they should be doing to look at their floodplain, and that has helped. We provide free training. I don't know if you've seen that term before, SD, which is substantial damage determination. That's where the communities need to go out after a flood event and see whether 50% or more of the fair market value has been affected in that structure. And we're seeing that's one of the issues we're having here in the state. And I'll show you why that's important later on and how they can actually access money by the municipality doing that. And then we also have a Pennsylvania flood tool. I don't know if you guys knew that. There's the FEMA map service. But, there may be a time when the map service goes down where, everybody from the nation's trying to use it. You can go to our PA flood tool. We work with Penn State on that. Everything that's updated at the federal level is updated into our PA tool. And one of the things we're working on this year is I get more calls on, I need a copy of our municipal floodplain ordinance. You would think the community would have that. So we're going to try to put that, all those that we have on the flood tool, because residents should be looking at it. Surveyors, engineers, all those folks need that. How do we comply with a regulation we can't find, an ordinance we can't find? So, next slide. Okay, and what do we do for joint outreach? You see our flood tool right here. We do a lot of things with the general public. We also go to public officials. We do the PA Farm Show. Have you guys seen us at the PA Farm Show before? Molly, we got to get them working on this. All right. All right. We also go to open houses, of course, and then we go to the CCO meetings, and that's kind of like where they set up. Here's we're going through a map update, and that's when we get a lot of residents that hey, I wasn't in the floodplain before, I am mapped in now. I've not heard of anybody saying, yay, I've been mapped out, but I've always heard from the folks getting mapped in, and so we go to those meetings. I mentioned the public officials. Penn State University, Harrisburg is going to be up here next talking about some funding that we're able to get and work through with them on a study on the NFIP. But I mentioned the funding that would be available through flood insurance. And so claims is a lot faster than I can do a grant, okay? And also, a lot of folks don't know that they have increased cost compliance that's available to them in their policy. And so I mentioned the substantial damage determinations, right? If that's not done, then the individual can't go to Bill and say, I need to get up to $30,000 to do repairs, to make my home code compliant. When a community does that, they hand that substantial damage determination letter to the individual. They can then take that to Bill and say, okay, it's been determined that I've met that criteria. And so we've run into that here in the state too. On the next slide, these maps, they just draw them. Well, no, there's some science that goes into it, okay? And so if you ever wanted to know, peek under the hood, how they do that, they have, they look at topography, hydrology, hydraulics, and field studies. So this, they really take their time on doing so. And I think you're seeing the maps are becoming more accurate than what they've ever been before. So yeah, if somebody was mapped in, there's probably a reason, future conditions that, yeah, we've got high water marks or whatever that's putting them in. Next slide. How many of you have seen this before? This is a digital flood insurance rate map. What's the blue area? Bill was talking about we're not allowed to call it the 100-year floodplain anymore. 1% annual chance flood area. Okay, that blue area right there. But then we also do get worried about homes, and we've seen it, that hash mark that goes through there, right? That's your high velocity area. That's your floodway. And so, folks needing to know, that, if they're looking at a map, they bought a house, they get mapped, how close are they to the floodway? That's where we're seeing the repetitive loss, severe repetitive loss homes. Okay, next slide. So, let's talk about disaster assistance. Not everybody's going to get disaster assistance from FEMA. We talked about it. We need to have that federal declaration. That doesn't always happen. We also talked about, the last time that we got it was 2018. The time before that was 2011. We received that. So not every federal declaration are we going to get it. We see more often in those non-declared areas the Small Business Administration loan. And when people say a loan, I don't want a loan. I want a grant. Okay, but that's part of the checkoff to be denied that they didn't get that, to actually receive that on a federally declared. So we need to get that mindset with individuals, saying that they need to go to the Small Business Administration. We talk about, the individual assistance grant, which is, see different stats there. 5,000 I had an average per household. And again, it's not always available. I'll talk about the hazard mitigation assistance grants, but those are timely. I mean, they take 18 to 24 months for like a home buyout, for an elevation. If you were talking about Yardley, sir, that falls under my program. And if you walk up and down Yardley, you're going to see where there's a lot of houses that are elevated. And so they're between the canal and they're between the Delaware River. And so, those are the type, high risk areas that we need to get the elevation. NFI policy claim payout. 69K, he showed 72, prices going up. And then also just keep in mind that $30,000 for eligible mitigation activities for those that are insured. And then some are expecting donations from voluntary organizations. And that's not a lot of money, expect the voluntary organizations to provide. Next slide. Okay, I won't go into every single component of this hazard mitigation assistance grant, but grants are available out there. For the flood mitigation assistance, the FMA, the community has to be in good standing with the NFIP, and they must have a policy in force throughout the grant. I've actually had to kick people out that they went from NFIP policy to a private flood insurance policy, and we had to kick them out. So we did all that work, get them a grant. They wanted to save some money, and I understand that, but they had to stay in the NFIP program. BRIC, the same thing. Community has to be in good standing with the NFIP. But home resiliency is low on the totem pole, low on the list for those type homes. For HMGP, a community doesn't have to be in good standing with the NFIP, but we don't want that. Next slide, I wanted to show some of those activities that are available under HM hazard mitigation funded projects. That's a laundry list of what we can spend money on, and you'll see acquisitions acquisition and demolition. What we're running into though is like when I take an acquisition and I take that out of the floodplain, my risk is what? What percentage do you think? 0, okay? But what does that do to any kind of tax base for a community? I've removed that, right? They don't want to see that now. They want to see either elevation because the individuals are still there, or what we asked FEMA to do a couple of years ago is look at mitigation reconstruction. And so we have our first project running in Yardley Borough, mitigation reconstruction. So they're going to build a house, same square footage, and that same foundation, and they're going to make it code compliant, and it's going to be above what we call the base flood elevation. So that's the way. They still got the tax base, they still got that home there, still at risk, but it's more code compliant than what it was before. And I can say too, for an elevation, we have to retrofit, a lot of older structures. I can do it cheaper if I do a mitigation reconstruction project. So, in most areas. All right, next slide. Disaster Recovery Assistance Program. This is a new program that came online here. If we don't have a disaster, the community has to declare a local disaster, and the disaster, is without FEMA assistance. It must have been denied if there is a Small Business Administration declaration, and support is capped at $10,000. So that's a new program that's coming online that funds were made available. And I just want to give an example of some communities that we're looking at Berks, Bucks, Northampton County that were maybe eligible for that funding. But again, they have to go through the eligibility criteria. The other thing is, how am I spending your money? Okay, how am I spending FEMA's money? If you can see, the green dots are flood reports inside the 100-year floodplain, and you'll see a number of dots of mitigation projects we're doing right within that floodplain. We're trying to do acquisitions. We're somewhere around 4,500 to 5,000 homes that we've acquired here in the state of Pennsylvania. We're one of the leaders in FEMA Region 3. Red dots are flood reports outside, so there's some things that FEMA won't allow me to do. I have to pass a benefit cost analysis, and first there's these homes that are affected by the water that sometimes I can't pull them in. They're outside that special flood hazard area. We know that they have damages, but we need a way for us to actually they're at risk. They weren't mapped in though, and we need to find a way for them. Next slide. I know we're not supposed to talk about policy change or anything, but you mentioned CRS. Here's one thing that we asked them about mitigation reconstruction, and that's now an eligible activity. See the X in blue? That's close to the water source, right? Does it make sense to either do an elevation or a mitigation reconstruction project in the same spot? If I've got a parcel, why not let me move that up out of the floodplain and actually put a home there, spend FEMA's money to do that, so we know that we've made them more resilient and more resistant to the next flood event. So it lessens the flood risk, and we're preparing for future conditions. And they're going to get a lesser flood insurance premium rate because they're further away from the water source.
That's fine if you don't have to acquire the land.
Right. That's what I'm saying. If they're in the same parcel, if we could do that. So give us that option. What they're telling us why they're not allowing us to do that is because of the environmental historic preservation piece. But we can work around that. We can do that, those studies and try to do that. I just gave you more information on the increased cost compliance. And this is the slide that Bill, said that I would talk to. What we're finding is it used to be that map that I showed you of the digital flood insurance rate map, the color-coded areas, the blue area. That area right there is a special flood hazard, we call it. Before, you were either in or you were out. They would call it, if you're out, you're zone X, okay? It doesn't matter now. It depends on how close you are to that water source and these other criterias here. So I used to, for example, and I'll use Yardley again, I could go and say, I'm going to elevate this structure 1.5 feet above FEMA's base flood elevation, and I would see probably a reduction about 2/3 in their flood insurance premium. That's not the case now. We're seeing a lesser amount for those elevations. So again, if I can try to get some of those factors, move away from the water source, get it up higher, those are some of the things I'd like to see. I mentioned why we couldn't do the relocation on site because of the EHP, but those are things that we're running into right now. Next slide. Also was talked about was the community rating system. Here's the municipalities that are currently in the community rating system. Okay, there's 27 of those, and you can see a lot of them are in areas that were hit by flooding, flood after flood after flood. Okay, and those are communities that we can talk to that, hey, it makes sense to expend our resources to get into the community rating system. It doesn't matter how many policies we have. This is a good thing. We want to do it. Okay, the next slide. Okay, benefits of CRS.
Tom?
Yeah.
Why are there so few?
I was going to talk about the next slide, but I got to do that. We're on the same. All right, but here's the benefits of CRS. The good things here: money stays in the community, insurance savings, better organized program, technical assistance, incentives to continue implementing good behavior and higher standards, enhanced public information goes out. So those are communities that have to have on our website. Here's some of the things that you should be doing. In your basement, moving stuff up, moving utilities up. These CRS communities push that every year. That's part, and they get checked by FEMA to do that. Also, we were talking about discount rates. So it works from 10 to 1. Okay, so 10 is like you just get in a program and slide your way down, and that's where you see the discount rates. Okay, and it looks like 1. That's a great. Let's get to 1. I can tell you there's only 2 communities in the United States that have that. And one just came on board was Tulsa, Oklahoma, and the other Santa Rosa, California. So ours are normally around 9, 8, 7, and I think we have 6. So, that's the highest percentage we're getting. Now,
Wilkes-Barre's is 6.
Oh, Wilkes-Barre's is 6? Okay. So the next thing, though, is opportunity. You can see, down in Bucks County area, Montgomery County area, they're in the top 50. Okay, we only have 27, but why are they not part of the CRS program? So are those communities that we probably should go out and start pushing the CRS working with FEMA? So we have some opportunity to do that. But back to Bill's point, though, we got to find a way to do this, in a commonwealth. Dauphin County a couple years ago after Tropical Storm Ida wanted to do a county-wide program. And FEMA would not allow us to do that because, the NFIP participating community is that community. It would be a borough or township, and not having someone else do the work. It has to be that municipality. Maybe that's a policy change that needs to happen, that we would push to have that happen. Why not, a third party doing that work for them? They're still making the higher standards and making their points in CRS. That would be something maybe the task force could look at. I also wanted to show, if it was easy, everybody would be doing it. And so your question was asked, somewhere else in the region, you'll see the numbers aren't real high for the other states. That Pennsylvania's in Region 3. So, it does take some work. I'd like to see a light or heavy program. We have a lot of rural communities, that, hey, you meet this standard, let's see if you can get a discount rate there. You got more capacity, higher population, you need to meet this.
Hey, Tom, real quick.
Yeah.
Sorry to interrupt. I just say, just adding on that, when you look at the analysis, that most communities that are in the NFIP, with the current ordinance they have on the book and some very minimal effort, can easily be a Class 9 or a Class 8. It's just getting them in and then maintaining it. So the higher standards built into Act 166 are there. It's just the administrative hurdle. So I think that's important to consider, because that's
right.
There's a lot more good candidates out there, but.
And there a lot of good work's being done in their hazard mitigation plans that they're going to get points for too. So,
From a resource standpoint, what do you think it would take to?
I don't know, Bill. How do you feel? I think it's the permitting part of it. That's one of the biggest pieces.
Well, I don't mean to laugh, but yeah, when we talk about permitting, permitting is still a challenge statewide. I mean, we go into the majority of the communities that don't even permit in the floodplain. They have no idea. It's startling the amount of communities we go into where there's not even a consideration of meeting the basic minimum requirements of the ordinance that they have on. So there's a huge liability issue there.
And I would say too, when we do the community assistance visits, there's stuff that's in the floodplain that shouldn't be there. We're talking propane tanks that are not anchored. We're talking hazards that are just put there in a floodplain that, are going to be a hazard downrange for their neighbor. And so, FEMA sees that and they rate it up, and, we do the best we can, but, it's going to take some admin work.
Yeah, and I think this, with CRS, it's a lot of admin. You're doing it, but you need to come up with an SOP, you need to document it, and then on an annual basis, you need to submit that information. So it's just another administrative burden for many of our taxed municipalities. Yeah, I mean, if you're Philadelphia and you can come up and hire a $80,000 CRS coordinator and run with it, maybe that's great. And that's what we see in other states and counties where they're doing it at the county level. They can allocate those funds to designate a CRS coordinator to do all of this and pull it all together. But with the way that we're at, with limited county power, it really becomes a challenge, and not all the municipalities get on board, especially even when we have counties that are interested.
Senator?
How many use regional entities like a flood protection authority like we have in the Wyoming Valley? So you've got Wyoming Valley levee system and a whole conglomeration, and they were all wiped out in the various floods. How many use that model, or is that the kind of thing that we should be encouraging or looking at from a policy perspective?
All those communities in Luzerne are actually using either third party or their own municipality. They're not using a flood protection authority.
They're not using.
No, but that's not, there's a couple avenues. I mean, if you look at county conservation districts doing the work, like Holman County, they do half of their municipalities right there from county planning. Lebanon County does about half of theirs too, the permitting for their municipality. So there's ways to kind of look at, how that piece might be able to fix.
Yeah, I think local development districts too. I used to work at CEDACOG, so it was like 11 counties. So, that was kind of where we got in on the ground trying to do it at that level. But the flood protection authorities, I think, are very valid. I don't know of many outside of Pennsylvania because a lot of ours are based around our levee systems, and we have more levees than anyone significantly in Region 3. I mean, when you look at the levee numbers, Pennsylvania's off the charts.
One of our problems is outside of the home rule counties, to your point, counties don't have a lot of authority. And maybe one of the things that come out of this could be a recommendation that we give them the authority to do these types of things. Because it's not, we would like them to be in CRS, but there are other things that can be done, particularly in the upstream towns, that may not be as prone to the devastation as these other towns are concerned. However, if they take steps that will help mitigate, problems downstream. So it's a two-pronged problem, I think. It's both these communities that are, and I'm shocked looking at this, Bristol and New Hope not being right. I mean, New Hope's a whole other issue, but these communities, getting them involved, obviously, that's got to be task number one. But secondarily, also then looking at these upstream communities and how we can help mitigate problems. And I think that might be enabling legislation to give counties the authority to do that. Would be something else. Obviously, funding, so I think it's going to be a critical thing.
Sure.
But it's something we should be thinking about.
And I wonder, if partnered with something like that, could you create a statewide office of CRS planning to work with the communities, both upstream and downstream, and somebody that could really talk to them about what they would need?
That's something we talked about previously within our agency. Is that do we have one person or do we have multiple people and just have an office that does that? Because a lot of it is what Bill was talking about, is giving them credit for what they're already doing, but they're not capturing, or they don't have the procedures in place, those types of things, to be able to get them entry into the system. The other thing, and Senator, you brought up a very good point, we hear it all the time, is it never flooded like this here before until they put the development in the neighboring municipality. And I know that was something that really the state planning board was looking at, of, incentivizing regional planning and stormwater management from that perspective, because we have tendency to be very myopic when we do planning. There are some really success stories in regional planning, but a lot of times we're looking at our municipality and not looking at what we're doing in our municipality and what the effect is to the downstream community. And when we're looking at economic development, do we award projects that are looking at a more regional approach and managing it from a regional perspective?
Right, and that's where concepts like low impact development can make a difference. More narrow cartways, more recharge on site, and then part of a broader stormwater management network. And that's where the county planning commissions can come in and help. Right, if there are more resources, then they can then work with some of these smaller towns that don't necessarily have the resources as well. So,
Any other questions for Tom? No, thank you very much. Next, we will move to the Penn State team. I think Philip and Nicole, is that right?
Yes, thank you. I'm going to sit too, as Tom did. And hello. So my name is Phil Serenides. I'm joined by my colleague Nicole Sturgis. We come from Penn State, Harrisburg. And it's a pleasure to be here. Like Bill, I have short tour through state government from 2009 to 2011. I was Director of Research and Evaluation for Pennsylvania's Early Childhood Office. And I've since gone into academic research. And we're here to present a report. And I actually think this could be a shorter presentation than the others. Really what I'd like to do, you should have a copy, is to talk through the table of contents. And if you have questions, happy to answer. But I'd just like to orient you to this study, to the findings, and we are available to follow up with you and provide any clarification or additional information. Thank you. So our title is Partnering for Protection. We come from Penn State Harrisburg. Yep, we can go to the next slide. The Institute of State and Regional Affairs is Penn State Harrisburg's oldest and largest research center. It is almost as old as NFIP. It's not quite as old as the Pennsylvania Stormwater Management Act, but we've been around for 50 years. And we are here to serve as a bridge to the capital region. Much of our work is with Commonwealth agencies. We work with PennDOT, Game Commission, Department of Education, Human Services, PCCD, Aging, Health. Most of our projects are providing data services, analytic services, research and evaluation. And this was an incredible opportunity for us to partner with PEMA. I want to just mention that this project happened because PEMA really advocated for and believed that this was important work. In 2021, I think it was, we applied for a FEMA BRIC research grant, which was not selected. FEMA then believed that this was important. They went out and they pursued funding through DCED, which was not as much as we had intended, but it allowed us to conduct the work that is here. And since then, we have been able to secure additional FEMA funds. So we're going to be conducting the second phase of what we had originally planned. I'll talk about that. But I think it's important to just discuss how this partnership has really been fruitful. And I think because FEMA has believed that a research partnership was important. So this study does not have information about how to make flood insurance more affordable. And we heard a lot about that from the other two. But as I looked at the legislation, and there were 6 details of things that should be included in the final report, I believe that the 2nd, 3rd, 4th, 5th, and 6th are all addressed here. Commissioner Humphreys, at the opening, you had said that you have heard, your insights were that people believe that they either had insurance when they didn't have it, or that it wasn't available, or they couldn't afford it. You can cite this report. We've conducted statewide representative surveys. We've conducted interviews with a variety of people from around the Commonwealth, different roles, different perspectives, and we followed a methodology that has allowed us to reach conclusions. So that, and I think many other useful insights could help as you move forward. So I want to move on past us, and as I said, acknowledge those who have helped, not only PEMA, but
Deputy Commissioner Dave Borno, as well as Deputy Secretary Arthun, very involved with us from the beginning, and we've had great assistance in our recruiting and our collaboration from the Pennsylvania Bankers Association, Pennsylvania Association of Realtors, Insurance Agents and Brokers, which is IA and B, and the Insurance Federation of Pennsylvania. So many to acknowledge, as well as others from the research team who are here with us today. So this report covers research that was conducted 2002 to 2022 to 23. The goals here were limited somewhat by the funding we had at the time, and we'll be conducting some phase 2 work to follow up. But for this work, we were investigating the knowledge, perceptions, and interactions with clients among professionals in 3 important sectors: real estate, insurance, and lending. We have survey data that is reported here that tells us that this is where most of the information residents are, where they're getting their information around flood insurance. And a lot of it is at the time of home purchase. And so we believe that it was important to talk to these folks, to learn from them. And in some ways, they may be in a better position to tell us about the mindset, the knowledge, and the types of information resources that could help residents make good decisions about their own flood risk and need for coverage, because they are the professionals that have the most amount of information and have direct experience with residents. We also, there we go. So we conducted both surveys and interviews, mixed methods approach. Our survey was representative statewide by region and age and sex. Following our line poll methodology, which is part of an ongoing survey that's conducted at the Institute. We use that data for descriptive predictive analysis to explore flood insurance knowledge, interactions, flood risk awareness. And as I mentioned, we conducted interviews with individuals from 3 different sectors: real estate, insurance, and banking, lending. Conduct qualitative analysis of that data to go a little bit deeper. Next slide. All right, so if you have the report, or if you can just look at the table of contents, pages 15 to 40 include the findings. And this is the highest level I could kind of bring our findings up to. These are just the big topics. So we have flood insurance coverage and purchasing interactions. We ask folks, do you have conversations about flood insurance with anyone? If so, whom? And then what is that conversation? Who initiated it? And what are you talking about? Most of the conversations are happening with the 3 industries that we mentioned. And most of those conversations are because people are telling them that they either can't get it or can't, or they think that it's not available to them in some way, which is something that we discuss in the findings. There's additional analysis that's included and some that's not around understanding some of the profiles that would differentiate individuals that either have insurance, believe they have it and don't, or the types of conversations they're having. And I think that there are relevant differences that we should further explore, and that will be part of phase 2. Understanding if there are disproportionalities by area, by economic stratus, by many factors, in terms of who's getting this information, what are the messages they're receiving. The second topic is client understanding of flood risk and flood insurance coverage. We learned a lot by talking with the folks who agreed to be interviewed, and we can identify that there are certainly some gaps in resident client understanding around their own risk. So, for example, some researchers have put forward a framework for talking about the cognitive and psychological biases that people may have when faced with a disaster. Some researchers describe this as the ostrich paradox, and it can lead to people focusing on short-term cost benefit, underestimating their potential loss, maintaining status quo, selectively applying relevant facts, basing their choices on the actions of others, or quickly forgetting lessons lost. We have a lot of support from the interviews to substantiate that it's not just that they either can't afford the insurance or they think they can't receive it. There are other factors that play into the decision-making process beyond the cost, beyond even the information that folks are receiving. And so as we get into the next phase of study, we're going to more carefully look at personalization of risk and try to better understand how either marketing or messaging or community engagement can support a resiliency mindset where folks can understand the risks that they have and believe that they can overcome adversity. That is something that I think we can learn a lot from the social science research and bring it into this conversation. Additionally, we looked at factors, we have findings associated with the factors around the actual purchase of flood insurance, what goes into that. Certainly, as I mentioned, we have cost being mentioned. But there is a resiliency mindset that was also identified, which is independent of cost, which is that there are some individuals that, even though it may be expensive, have that confidence that they will be able to overcome adversity. And those folks are associated with greater likelihood of purchasing insurance. It is the case that those are often seen in more affluent communities, but that is not to say that there is not a resiliency mindset in other communities around Pennsylvania, as well as some gaps that we may have, even where people can afford to purchase the insurance and need it. Did I get that right? Okay. Moving on to knowledge base of professionals. The next slide we'll talk about recommendations, so I don't want to get too far into that. But we identified that there were gaps in the knowledge of these professionals. They did not fully understand the flood risk. They did not fully understand the insurance options. And there was a tendency toward not bringing up any conversations that they were not obligated to. That was especially the case in the banking lending industry, which is to say that because there were insurance professionals, unless there was a requirement for an individual to have a discussion around flood insurance, they would avoid the topic. Similarly, in the real estate profession, we found that while certainly there were some folks that were concerned about this, engaging their their clients in conversations around flood risk and the need for insurance. Those folks tended to be individuals that had either personal experience with flooding or had pursued information on their own beyond what was provided to them through minimum licensing requirements for training, et cetera. More often, younger, more inexperienced realtors didn't touch the topic. And there are other findings that can help us better understand not only what types of information these individuals could receive to improve their communication around flood risk and insurance, but also who those individuals, how we can target those effectively to folks that need it the most. Finally, interactions between professionals and clients. I think we learned a lot there around types of conversations that are and are not happening, the messages and the incentives that are behind sort of even showing a house, right, or even listing a house based on perceptions of what the flood risk might be, what this prospective home buyer may be able to afford, et cetera. It's all in the report. Moving on to our recommendations. Originally, the first draft of this report, there were a few recommendations, and I want to thank Director Doherty and Director Hughes for really pushing us to make sure that we had comprehensive recommendations that can be supported by the evidence of the report. It's now like the last third of the report. There's a lot of recommendations at the back of this thing. They're in 6 areas. Under each, there's 2. I actually was trying to do a little Noah's Ark theme joke as part of it, but the team didn't think it was funny, so we didn't. We didn't go with that. There are 12 recommendations organized under 6 headings. The first is around professional training and education. We have information here about the minimum licensing and professional credential standards, there's opportunity to look at what are those requirements and what should the training be required for individuals who are interacting with and we know have the greatest influence and opportunity to communicate important messages around flood risk and the need for coverage. Tailored information resources, FEMA, I mean, with 2.0 and with all the great GIS work coming out of FEMA, as well as from within the Commonwealth, from the agencies, from other academics, there's a lot of information, but maintaining this in a place where people can go for an authoritative source of information where they know this is where I go, and making sure that that is provided in a way that's updated is something where we have room for improvement. Additionally, I think we want to think about different audiences, but specifically for professionals. Where do they go for information? Well, a lot of times it's their peer professional networks, or sometimes their member organizations for their professions. Sometimes they're Googling information, right? So we need to be able to have a place where they can have a repository of the most updated and clear information that's both for training, professional development, but also keeping people updated with relevant changes. The third area of recommendations is cross-sector coordination. We recommend that PEMA or throughout the state develop non-policy, non-regulatory frameworks for cross-sector interactions, because just as there's a lot of organizations and interests around, represented in the task force within the different sectors of industry, there needs to be opportunities for more collaboration, coordination, which could involve joint trainings. It could involve different types of even informal professional interactions to bring these folks together, because there is not a lot of communication sometimes. And as a home buyer or as a resident, you're working with a realtor, you're working with your bank, you're working with insurance, and they're not talking with each other. And so even getting different messages can be confusing, but certainly having an opportunity for shared learning and coordination is an area that we would recommend. That could be something led by the Commonwealth, or it could be something where a partner is provided. I'm not offering it that, but there are a lot of opportunities for how you want to structure that type of professional forum and opportunity for shared learning and support, specifically around client education. So the last two, tailored information resources and cross-sector coordination, really are focused largely on the professionals who have roles that would allow them to communicate with residents and homebuyers. The next one is around client education and communication. Just like there are different professions that maybe need different information, thinking of residents as being a target population for information, not just messaging, but a place where they can go to get this information, and working through trusted partners. So we've done a little bit already. We're going to do more on trying to better understand where are folks already going for information, and then to think about partnering with those types of agencies, trusted, already established, to be able to provide accurate and helpful guidance and information around these issues. A final piece on communication. There's also work that can be done not just on the information itself in terms of the accuracy, making sure it's comprehensive, complete, but on how that information is communicated. So this is not just a website, or this is not just a training course for someone to be better at speaking clearly, which I need to take. But there's a lot in here around communication. And then moving on, resilience, mindset, and community engagement. As others were talking about CRS and other types of community engagement strategies, there are some recommendations throughout here around strategies for community engagement, which provides another opportunity for that trusted partner or that different type of way of connecting with Pennsylvania residents. And finally, feature research. This is both in terms of identifying a specific research agenda and then working with multiple institutions and researchers, but having a research agenda, a learning agenda that represents the pressing questions, the prioritized information needs. That is something that takes work. It's very difficult to know your own information needs. So anticipating that, if there's an effort to collaboratively develop a research agenda and then work through a process of partnerships to answer those questions, that would be helpful, as well as in general having the type of continued support that we've already had. Yes, thank you for that, Molly. Okay. Last slide. So I mentioned that the original award from FEMA was not unsuccessful. Thankfully, FEMA was able to secure DCED funds for part of that work, and we now have worked with FEMA to receive funds for the remainder. The purpose of this additional next phase is to examine the purchasing motivations, barriers, awareness, and the type of coverage that is available and needed. So we will be engaging a representative sample of Pennsylvania residents and business owners to go much deeper into not only their experiences, their priorities, but as I mentioned, some of their personalization of risk to understand not just flooding, but what are you worried about? Flood, fires, wild animals, crime, mental health, physical health, and to position flood and hazard risk within that larger schema. Also considering the different cognitive biases that I mentioned that may be at play. So through this, we really want to also support the task force. Not only are we, I'll speak for myself personally, but as a team, as an institution, excited about our opportunity to contribute, committed to doing everything we can to provide the information that could be helpful, and will be available for that and for any questions. Molly.
That's actually what I was raising my hand before. Would you please share with the group briefly some of the reasons why industry wasn't comfortable sharing outside of their particular area of knowledge? And it's not because of anything nefarious or because they are trying to hide. It has more to do with
it was that mentality of a stay in your lane approach.
Stay in your lane.
Realtors didn't want to speak about insurance because they wanted to refer their clients to what they considered to be an expert, which was going to their insurance agent. So very much all of the groups that we spoke with, they took that approach of, we're going to stay in our lane. I'm talking to them about, real estate, and I'm talking to them about homes, but if they ask a question, as soon as they ask a question about insurance, I'm going to tell them to speak with their insurance agent. Or if it was banking and lending, they would talk about it as far as regulation. So what do you need in order to get this loan, or what do I need to make sure that I have in order to secure that? But other than that, if you have additional questions about coverage and cost and those types of things, you're going to have to go to the insurance. So it was very much, that was one of the big things with that stay in your lane approach.
And I believe that we were in part successful at being able to collect that data and provide those as findings because we were regarded as an independent research organization with research protections in place such that we weren't disclosing the identities or even providing the transcripts of those interviews to the funder, to the partners, et cetera. So they're anonymous in the research, and I think that helped.
Where did Did you hone in on, in the recommendations, where you think there could be better disclosures? I've seen a couple neighboring states now within the last year, I think, maybe New Jersey, Delaware, I think came to mind, is requiring more specific flood disclosures, flood history disclosures. I think it's on the realtor side. And I know maybe we're thinking about, and obviously we'll talk about next steps later, but bringing in groups like the realtors to talk, like the insurance agents to talk. But at the same time, I think I balanced that a little bit with, I've bought 4 houses in 10 years as I've moved around. I mean, going through the closing process already is a lot of paperwork.
Yeah.
And you lose people. So I don't know where in the process is a good part of the process to include more robust disclosures.
Yeah, closing is probably one of the most stressful, and it's an opportunity, but it could even be the worst time, right? So we haven't pinpointed exactly when, but I can say we've recommended not only disclosures at closing, just so that folks are aware, right? Because that's should be due diligence. But also after mortgages have been paid off, oftentimes people drop insurance and they're not aware of the risks that continue. In fact, they may not be aware that they even had insurance. They just know, I no longer I'm required to pay this into escrow, so I'm not doing it anymore, type of thing. So, whatever the rationale is for dropping at the time in which folks have paid off a property or mortgage, that is another opportunity, I think, to provide information reminding what risk may be and how it may change. I'm not the expert here, but what we've heard is that the topography doesn't change that much, but the built environment does and the climate does. But the built environment, you could be fine. The zoning, they allow a parking lot in the church down the street, and suddenly you're getting the runoff. So, in as much as there are changes to that environment, people's risks change in ways that they may not understand. And so having multiple opportunities for people to review their options and to see what needs they may have are important.
I think one of the things too we saw was to have it at various points in this process, and that's going to be really important. So making sure that throughout the process, that instead of taking that stay in your lane approach, that as if all of these individual industries have the same education and are given that information, they can then share that with the client, and it's a consistent message throughout the entire process. And so I think that is going to be really important to make sure that it's not waiting until closing, that you're not just being not getting your questions answered and just have to go to an insurance agent because your realtor isn't sure what information to share with you, or your bank isn't only providing you with, you must get flood insurance, but if you have any specific questions, go here. But you're getting it throughout that process.
You're not just getting referred around to somebody else all the time.
Personally, I would have liked to know, as I'm walking in to see the house, maybe that's a point at which you tell me it's in a flood zone or a special hazard flood zone where my mortgage broker is going to require flood insurance.
And some realtors will do that, but what we also heard too from many is that there's that stigma associated with properties in those areas. And so some realtors will just shy away from taking them there, and only those that maybe had that personal experience, or if their client was really, I want this property, this is the property I'm interested in, this is the area, then they would be able to share that. But another thing is also making sure that they're getting, the communication is done in different ways. So whether that is, different modes of communication, making sure that it's in different languages and accessible to all clients. So there's a lot of other things too, not just throughout the process, but making sure that it's, appropriate and meaningful for that particular client, whether it's a renter or a home buyer or a business owner.
We've also had conversations around what this
looks
like.
Penn State?
Yes, sorry, I'm Tim Stravinsky. I'm with the Penn State team. We've also had conversations about what it means to have these conversations with renters, because they might not have the same structural opportunity that people buying a home will have, right? They don't have the same touch points. So what does that look like for renters who tend to be more, lower income and perhaps just as high of risk? So that's something that I think we're going to have more conversations with in the next phase.
So any other questions for the Penn State team? Were you going to add something?
I was again going to just end how I began in saying what this report does not include, which is it does not include any recommendations or findings that can speak to how to make insurance more affordable. Okay, this is limited to understanding how both at an agency level and working with different these different professions and the professional groups, how we can have better information provided to make more informed decisions.
Really appreciate your time, appreciate the report, and I think we will probably continue to stay in touch. So thank you. The next presentation is from the insurance department. Mike McKinney, that I mentioned, is our chief on the rate-informed product side, knows about as much as anyone on all things property casualty insurance, and is actually a resource to his colleagues in the Northeast zone because of his knowledge. So appreciate you being here, Mike, and look forward to your comments on kind of what we see at the department.
We have till 4 o'clock, right?
Yeah, you do not.
I'd like to exercise my right to tell a joke.
Also denied.
All right, so this is the flood insurance premium. Difference between a regular joke and a dad joke. With the dad joke, the punchline's already apparent.
All right, Mike.
New writers.
Before I get started, we're going to concentrate again on the property side of flood insurance, but I did want to make one note. I was at an NEIC meeting, one of the national meetings last year, and it was a presentation about how after a disaster, the health issues that linger for many, many years after a disaster, and that includes flood. And that can just be the mental stress of it, but also the mold and the disease and everything else. So we're talking about property, and I'm going to go right back to property now. All right, first slide, please. Next slide. Start by talking about the different ways flood insurance is sold in Pennsylvania. Obviously, you have the NFIP, but then we have what I would call NFIP-like policies. That's not trademarked, but these are the private insurers that take the NFIP policy, they cross out NFIP, they cross out FEMA, they put their name on it, and they're competing with the NFIP in the special flood hazard areas, and it's a product meant to comply with the federal lending regulators' mandatory flood insurance requirement. Then you have the policies that are not like the NFIP. These are the private market policies. These are often inland flood endorsements that attach to a homeowner's policy. They're not meant to compete with the NFIP. They're not really meant for the special flood hazard areas to comply with the mandatory flood insurance requirement. But there's a lot of them out there. A lot of them are being backed by reinsurers. The reinsurer creates the product and then finds the licensed carriers or the surplus lines carriers to write it for them. Flood insurance is sold on a standalone basis. You buy just a flood insurance policy. It's also sold by an endorsement, attaches to your homeowner's policy. It's also sold by policies that don't exclude flood. There are policies that don't exclude flood. Yeah, some renters' policies actually don't exclude flood. You can buy flood insurance on a primary, meaning a first dollar basis. You can buy flood insurance on an excess basis. That's more common in commercial lines. Flood insurance, you can buy it to cover your building. You can buy it to cover your contents. You can buy it to cover both your building and your contents. All right, I have sewer or drain backup on here. That's not really flood insurance, but it's something just about every homeowner's insurer offers as an optional endorsement. This is water and sewage that backs up into your drains or your sump pump or et cetera, often in a basement. And again, just about every homeowner insurer sells this. It's not that expensive, well under $100. Once upon a time, I would say $40 or $50, but the pricing's got a lot more sophisticated. But even when the surface water doesn't reach your home, oftentimes in a flood event, it's backing up through your sump pump, backing up through your drains. And this is an endorsement that almost everybody can purchase and have that coverage. How about your auto insurance? When there's a major flood, there's a lot of total loss vehicles. And if thinking back to Houston, some of the hurricanes that hit Houston, there was over 1 million total lost cars. And for you to have coverage on them, you have to have comprehensive coverage. If you have an auto loan, chances are you have comprehensive, your lender's requiring it. If you don't have a loan, this is an optional coverage in Pennsylvania, and so you might not be insured. You can buy flood insurance from NFIP Correct, from the NFIP Write Your Own program. You can buy it from the surplus lines market, from the admitted market, and then I put mutual aid societies on here. Pennsylvania has a very large Amish population. There are a lot of lenders out there that accept Amish aid societies for proof of insurance, proof of fire insurance. Historically, a lot of them were accepting it for proof of flood insurance. I think some of the changes that were made more recently with the federal lenders regulations is starting to call some of that into question, but they're out there and there are lenders accepting them. Next slide, please. This is an overview of our private flood insurance market in Pennsylvania. I want to make sure to specify this is an attempt to measure 1 to 4 family unit owner-occupied dwellings. Okay, this is something we started measuring going back a lot of years, way before Risk Rating 2.0. You had Biggert Waters in 2012, an attempt to move the NFIP to full risk pricing. A lot of sticker shock. So then there was a couple of acts in 2014 that put the brakes on that. Reintroduced some subsidies, reintroduced caps, etc. But that created an opportunity where states like Pennsylvania said, we really need to see what we can do with the private flood insurance market to compete with the NFIP. So we started tracking that back then. One of the big things we did was we put flood insurance on our export list. Well, what the heck does that mean? On the last slide, I talked about flood insurance being sold through the admitted market and the surplus lines market. The admitted market are your licensed insurers. We're regulating their rates, we're regulating their policy forms. But then you have the surplus lines market. These are insurers licensed in another state, but not in Pennsylvania. We're not regulating their rates except in very specific limited circumstances. We're not regulating their policy forms. But you have to go to the admitted market first, get your denials, and then you can go to the surplus lines market. Unless it's on the export list. Flood insurance is on the export list, you can go straight to the surplus lines market. We did that so consumers would have more choices immediately. They wouldn't have to get their denials before they could see what's available in the surplus lines market. Okay, as you can see here, when we started tracking this in January 2016, we had about 1,500 private flood insurance policies. We're up to about just shy of 16,000, pretty good growth. It's 15,900-ish actually, and if you want to compare this to what's sold in the NFIP, the best I can come up with, again, saying 1 to 4 family unit owner-occupied private residential dwellings is about 35,600. So in total, a little over 50,000 of these types of properties, these types of homes, insured for flood insurance. These 16,000, the major carriers in Pennsylvania, Lloyd's of London and Lexington, combined 6,000 or 7,000 policies. They're writing NFIP-like policies. They're taking the NFIP policy, crossing it out, putting their name on it, selling it in the special flood hazard area, complying with federal lending regulators' requirements. Beyond that, you get into these inland flood insurance endorsements that attach to like a homeowner's policy. Happy to say that the 2 largest writers, as of the last we have these statistics, is Millville Mutual and Nazareth Mutual, both Pennsylvania domiciled insurance companies. I think they're both backed by the same reinsurer because their policy form looks almost identical. And they're both writing a little bit over 1,000 of these inland flood insurance policies. Next slide, please. So what's the NFIP flood insurance definition look like as compared to what we're seeing on these inland flood endorsements? NFIP says, inundation of 2 or more acres or 2 or more properties. These inland flood endorsements, they don't require that. So in that aspect, you can say a little bit more generous with what they'll call flood. On the other hand, the NFIP is covering collapse or subsidence of land due to waves or current of water. These are inland flood policies. They're not meant to cover that. They're not covering it. Next slide, please. This is with the Nazareth Mutual. If you had Nazareth Mutual as your homeowner's insurer and you bought their inland flood coverage, this isn't obviously the whole endorsement, but this is what it would look like. And as you can see, the bracketed numbers They're offering flood insurance limits of $5,000, $10,000, or $15,000. That might not look like a lot, but we're going to get to some statistics later that say if you live outside a special flood hazard area, NFIP statistics would tell you that the average flood claim is a little under $11,000. So you buy $15,000 of coverage here, and you're covering more than the average claim for where this endorsement is intended. Next slide, please. This is the Millville Mutual endorsement. Schedule looks about the same. You don't see the 5,000, you don't see the 10,000, you don't see the 15,000. That's because Millville Mutual will write you up to a $50,000 limit, increments of $5,000. Next slide, please. All right. So I talked earlier about backup of sewer or drain. I just picked State Farm Fire and Casualty here because that's the largest homeowners insurer in Pennsylvania. But this is what it looks like. This is what the endorsement language looks like. Again, water that's backing up through your sump pump, backing up through your drains, backing up through sewage that's backing up, and it's going to provide coverage for your building, for your contents. Next slide, please. All right, so Erie is the second largest homeowner writer, another Pennsylvania domiciled company. They have an extended water coverage endorsement, and they write on one endorsement the best of both worlds. So they're doing the backup of sewer and drains on the same endorsement that they're doing flood. This is a little bit newer. I don't have statistics on this. It's not yet being reported in the private flood insurance supplement. But again, another Pennsylvania insurer coming to bat, providing flood insurance coverage. Next slide, please. So where do I see an opportunity? And maybe I should say where's the low-hanging fruit that we can really make a difference right away. So in Pennsylvania, we estimate we put this out a press release last year. We estimate that there's about 3.1 million insured homes. Again, 1 to 4 family unit, owner-occupied, private residential dwelling. A lot of adjectives there. And a little over 50,000 of them are insured for flood. Well, that's a lot of opportunity, for insured homes to also have flood coverage. According to FEMA, around 40% of all of their flood insurance claims come outside the 100-year floodplain that apparently we're not allowed to use anymore. The 100-year floodplain, we're going to go through a quick math lesson here. 100-year floodplain, 1% chance or more of flooding in any given year. So 100% minus 1% is 99%. With me so far? If you go back to the last time you took statistics or probability, take 0.99, raise it to the 30th power, and you get 26%. So you might live in an area where you're not mandated by flood insurance by your bank, and still have a 25.99% chance of having a flood over the course of your 30-year mortgage. And again, I already said this, but according to NFIP's, this is a June 30th, 2022 file. You can take out the special flood hazard areas, and the average flood claim, it was like 10,900. Can I get a quick show of hands? Who lives in a flood zone? All your hands should be up. Everybody lives in a flood zone, and just about everybody can purchase flood insurance, whether it's from the NFIP or from a private insurer. All right, so what are some of my recommendations? Get the word out. Flooding can and does occur everywhere. Everyone lives in a flood zone. Everyone can purchase flood insurance. Even if you don't live in a special flood hazard area, this is a big one. If you don't live in a special flood hazard area, you don't have to insure the full value of your home or $250,000, whichever is less. If you don't live in, if there's not a mandatory requirement, you can buy $10,000 of coverage. You can buy $20,000 of coverage. I talked earlier about those inland flood endorsements. According to the statistics that they're reporting on their annual statement, the average cost of that's about $40. There are private insurance options. It can be very affordable. Don't forget about water and sewer backup coverage.
Any questions for Mike?
Yeah, so with Nazareth and Millville, for example, is your backup sewer drain, is that automatically included, or is that a separate rider?
It would almost, I'd have to look at it, but it would be extremely surprising if it's not a separate endorsement.
Yeah, what about regular flood insurance? Would that automatically cover those?
No.
That's also.
Erie is the first I've seen anybody combine both on one endorsement. And I should note that Erie, in its endorsement, Erie says this is not meant to comply with federal lending requirements. It is not supposed to be a substitute for the mandatory purchase requirement.
Okay, good, thank you.
Other questions? Okay, thanks, Mike. Now, we have, I think Kaylin Martin is coming up. She's our Deputy Policy Director at PID, and she was going to review the public comments that we received. As many of you know, recognizing that we have a tight timeline between when this board came effective at the beginning of January and when our report is due in the summer, I went ahead and opened a public comment period as commissioner before we started, so we would have some feedback from the public, give people an opportunity to weigh in, give us some thoughts that we could start to look at here. I think we printed all of the comments.
Yep, they all should be there, and we also emailed them around to all the task force members yesterday.
And they're on our website too, right? Or not yet?
Are they? Not yet, but they will be.
They will be on the website. So I asked the team to come and just give us the highlights as part of this first meeting.
Sure. So we're just going to briefly, I put together a quick agenda, briefly go over the public comments at a glance, pull out some major themes, look at the consumer comments because the majority of the comments that we received were from consumers, and then look at other comments from organizations, and then just some policy suggestions that were pulled out from the comments as well. Yeah. Okay. So the comment period timeframe was from January 5th to February 5th of this year. We received 34 comments overall. As I said, majority were from consumers, but we also received comments from other organizations such as Rethought Flood and the Pennsylvania Association of Realtors. Some of the major themes that were identified was the cost of insurance, specifically the rising cost, the expense, and the affordability issue. Another theme was municipality engagement and really the importance of municipalities to be engaged on flood mitigation. And also the coordination among different levels of government, so between the federal government, state government, county, and local governments. And also, many of the consumers also want to be able to pay their flood insurance in monthly payments. Many of the comments mentioned that they were paying in lump sums, and that was cost prohibitive for a lot of people. So now, we're going to go through the consumer comments. So I just did them like 1 through 29. And the first one, they mentioned that flood insurance prices have increased and that properties bought out due to flooding are being sold back to communities to build on, and that is an issue. The second one is that flood insurance has also increased the expected monthly payment on the house. So this person was purchasing a house, they had the mortgage, and adding the flood insurance was an unexpected increase on the monthly payment, and that flood insurance was not disclosed at the purchase of the house. The third one commented that heavy weather events have increased the prevalence of flooding and leaks, and they were specifically talking about Port Richmond in Philadelphia. The fourth one is lack of infrastructure and maintenance at a municipal level, so needing that support at a municipal level, and also the loss of open space due to new construction. And then the fifth comment, which is not on the screen, but I think it is in the printed out comments, is that flood insurance should be offered as a fixed amount to consumers. Moving on, this person commented that they can't access affordable flood insurance and that there's also a lack of communication on flood mitigation from the municipality. The next comment is that municipalities are not assisting residents, and that flood insurance is unaffordable for them. Again, the next one is bringing up municipalities again, and that municipalities could benefit from a flood insurance expert on staff. Also, that payment of insurance as a lump sum is cost prohibitive, and it would be helpful if insurance could be added to the escrow, which I believe it can, but I'm not sure if this commenter understood that. The next comment is that they were discouraged from buying flood insurance, and that flood insurance needs to include the causes of water damage in homes. And they also were talking about how downspouts used to drain into sewers, and now that they don't, it's causing a lot of runoff in like homes, yards, and those sorts of areas. The next comment, which is number 10, talked about water runoff and stormwater drainage and how those are huge concerns. Specifically, they were talking about Yardley, and that ground flood water is not covered by homeowners insurance. The next person commented that buildings should not be built in flood-prone areas, and that if buildings are built there, that they should be bought out and removed from those areas. The next person simply just said that flood insurance needs to be more affordable. The next comment, comment 13, insurance is not affordable, and coverage is also not always comprehensive. The next comment also says that premiums are too expensive and there needs to be a monthly payment option. The next one said that senior citizens should receive a discount, and they also believe that rivers should be dredged and made deeper as assistance with mitigation in their area. Comment 16 also mentions that cost of flood insurance is too expensive, and for them they're having an issue where the bank was stating the house was in a flood zone, but FEMA said that they weren't in a flood zone, so lack of communication between two different people. The next one is price of flood insurance for houses in flood zones versus houses not in flood zones, and just the vast difference there. The next comment is talking about stormwater and how that has increased occurrences of flood in their neighborhood, and also that flood insurance is cost prohibitive and that local governments should support flood mitigation, so that it should be down to like the community level and the community should be engaged. Number 19, they were concerned about the cost of flood insurance rising. The next comment also said that not just the flood insurance, but contents insurance for inside their home is too expensive, and that the NFIP deductibles are too high. And this person is on a fixed income, so they said that their deductibles are too hard to pay with a fixed income. Comment number 21 says that flood insurance is no longer affordable for them. The next comment, the addition of flood insurance to a mortgage payment almost priced clients out of a house. This was from a realtor who had seen her clients already go through the process of getting the mortgage payment, and then at the last minute they found out that they had to include flood insurance on top of that, and they were within a really tight budget, so adding the flood insurance to that mortgage almost made them like not be able to buy the house. And again, that insurance was not disclosed to them at the outset of purchasing the house. Comment number 23. Just two things for us to consider, flood insurance for apartments and renters, and also flood insurance for those who live in beach areas. The next comment talks about that flood mitigation is poor and there's inaction at all levels of government, and that flood response needs to be coordinated at the local level. The next comment says that there should be an option to pay flood insurance monthly instead of once a year. The next comment, comment number 26, said that flood insurance has become too expensive and the insurance is not actually covering flood damage. Comment 27, again, mentions payments and said that they should be allowed to be paid in installments and that we should consider those on fixed incomes. Comment number 28 said that we should limit construction in flood-prone areas and also designated floodplains, and that we have to find the balance between the rights of property owners and also the environment and the ever changing storms. And then the final comment says that the NFIP continuing education courses should be utilized and that FEMA needs to update maps. And then we can go to the next slide. And then the next couple of comments are just from the organizations, not the consumers anymore. So I pulled out a couple of key takeaways from each of these comments. So the first organization was Rethought Flood, and their 4 main suggestions were to use a fully modeled approach for flood rating, and I believe that goes into more detail in the actual comment there. They also said to invest in education materials on flood for homeowners and business owners, encourage flood mitigation options, and explore a community parametric option. The next comment was from the Pennsylvania Association of Floodplain Managers NFIP implementation survey. So it was a long survey, and the survey reached out to municipal officials to understand issues that are experienced while working towards flood resiliency within communities. And overall, 287 municipal officials were surveyed in the survey. So just a few key takeaways. 84% of those who responded were unsure if there was any flood insurance training required for agents. 51% of respondents stated that their floodplain management staff do not have the sufficient technical resources. 52% said that their floodplain management staff do not have sufficient training to perform the required tasks. And 58% of the respondents did not want floodplain management responsibilities transferred to the counties. So they did kind of break it out for those that did and those that didn't. Those that thought it should be transferred to the counties noted that the counties have more resources, while those who said no believe that local governments have the knowledge and could do a better job because each municipality, even within a county, is different. The next comment was from the Pennsylvania Association of Realtors, and the key takeaways here were implementing state-level affordability programs. They also pointed out that if you leave the NFIP program, even if you go back to the NFIP afterwards, you can no longer receive those subsidies. You have to stick with the NFIP the entire time. They also said that education for homeowners is vital. So information on flood risks, tools that can assess flood risk, costs related to flood damage, and options for flood insurance are all important things to educate homeowners on. They also mentioned it's important to have up-to-date flood maps and that we should have a state website to provide more granular flood risk information. And then the last comment was from the insurance agents and brokers. And these comments were that the task force should look into potential programs that provide premium discounts. A public education campaign would be beneficial to homeowners and should address a bunch of different issues on flood insurance. We should also look at programs to create incentives for local governments to implement or expand flood mitigation efforts. And residents should be informed about what options are available when they purchase flood insurance. We should also consider how to increase the number of people that purchase flood insurance to assist with communities to become more resilient. And that mitigation should be coordinated between state, regional, and local levels of government. And then just a few policy suggestions that I pulled from all of the comments. One that we saw over and over again was allowing flood insurance to be paid monthly versus annually. The second is to empower municipalities to take on flood mitigation efforts and for all levels of government to coordinate on the mitigation efforts. Focus on increased stormwater runoff and drainage issues and how these problems are impacted by new construction. And education for consumers, government employees, insurance agents, etc. And then within the actual comments, they do dive deeper into education suggestions and programs that could be used to increase premium discounts and increase the number of people using flood insurance. And that is all I have.
That's a lot.
Yeah.
Any questions on the public comments that we received? Okay.
So I would just say that with that, just to underscore that last bullet that I would put on here and the policy suggestions is to think about some kind of state program. Because I know realtors and a number of others talked about a possible subsidy program.
Okay, so I recognize that at the beginning of the meeting, I allowed for public comment that everyone on Teams did not hear. So I will circle back briefly, allowing public comment at this point. It's permitted, it's required under the Sunshine Act. Any public comments, though, we would request be limited to no more than 5 minutes in duration, directed to the chair, and they may or may not be addressed at this meeting. So is there anyone on the phone that had a public comment that they meant to provide and didn't get an opportunity? Hearing none. What are you talking about?
Susan Patterson.
Ms. Patterson.
Good afternoon. Can you hear me?
Loud and clear, yep. Can you tell us who you're from or where you're from?
I work in Philadelphia for the Philadelphia Water Department, and I was last year's past chair of the PAFPM and conducted the survey that you were given a summary for. The one comment, we will have some more to add to this, but there was a lot more in that summary that wasn't in that summary that you just saw about the application of Risk 2.0, which gives residents a discount for application of changes to their property. A lot of people had never heard of it, and insurance agents had not been trained for it. So that was something that really elevated that I wasn't reading, was coming out of the discussion thus far. That's the one comment I wanted to make.
Very good, thank you. And are there any other hands? Can we see? No other hands? Okay. So I think we'll take that back then to the task force and discussions of potential next steps. So we had laid out and I think sent around just an initial tentative meeting date schedule, trying to meet pretty much every month between now and July to make sure that we get enough presentation time, discussion time, and then I think towards the end, it'll be really going through a draft report that our staff can help pull together. Those tentative meeting dates were March 6th, April 3rd, May 8th, June 5th. We also thought about, at least for those first two, trying to get out of Harrisburg. So we were looking March 6th to try to maybe get to Johnstown, working on potential location there. I think April 3rd, do we have potential locations for April 3rd?
It's over in the York area.
Potentially over in the Yardley area. Hard to line up spaces, but we're trying to do that now. Do those dates and in general locations, the last two, the May and June, I think we try to come back here, host it in the same room and have fewer IT issues at the start. But do those dates generally, you think, work?
Yeah, I mean, my only constraint, we have budget hearings on the 6th of March. So I can perhaps participate virtually if that becomes an issue, but can try to figure it out.
Yeah, we could definitely do virtually, but we can also look at March 6th also and maybe move it a day or one way or the other. I don't know.
And then Commissioner, you said May and June both likely to be in Harrisburg. Those are House session days.
Okay.
So we wouldn't be able, while we could do it in Harrisburg, we wouldn't likely be able to travel on those 2 days. If that were on the table.
Okay. So keep those in Harrisburg, those two. Okay, so we'll plan to look at dates around the 6th to see the flexibility there. April 3rd, are we doing okay with locations, or do you think it'd be helpful?
I believe we have my staff is working.
Oh, great, okay.
Yeah.
Perfect. And I think in terms of, I don't think we need a motion to approve that, right? I mean, they're just tentative dates that will ultimately line up and then announce, and we can go through the whole public comment period, or not the public comment period, public disclosure of those dates.
Yeah, you can, I mean, I wouldn't move the 6th of March only because that entire week is appropriations hearings.
Okay.
We'll just see how it flows, and if necessary, I can participate, virtually.
Yeah. Okay, great. We plan to make them all virtually available. In terms of future discussions, interested if there's any presentations members feel like would be important to have. Our tentative thought was you bring in groups like the realtors, the insurance agents, maybe the insurance companies, Penn State potentially to do the follow-up on part 2 of their report. And then April move into kind of almost a municipal government session. Maybe bring in Philadelphia, maybe bring in a couple others, and some nonprofits that have worked in that space. Carolyn Kuski is one, works with the Environmental Defense Fund. She's worked with Manhattan on developing a parametric insurance program. Well, not insurance, it's technically a derivative, but that once a certain amount of water triggers, a payment is made to, in this case, a fund that can then deliver to residents in that space. But just really trying to look at innovative work solutions that groups have worked with local communities on is kind of the April 3rd date. Keeping May 8th free for now as we develop kind of over the next 2 meetings or have more conversation, and then June 5th, keeping that free for now, anticipating that my team will have a report together that we can start to go through kind of the language. We are also kind of just in the staff level trying to develop just a parking lot of ideas that we come up with as we talk about the meetings and with participation from these interested parties. So would be open to any thoughts that people heard today. I think some of the issues that I heard were disclosure and education, CRS, coordination with local governments, empowering municipalities to take action, mitigation, stormwater drainage is an issue, and potentially a state subsidy and or small disaster assistance type programs.
Yeah, and I would only add to that, perhaps tying that last piece to the piece about the municipalities by way of providing an incentive.
Okay. So
And there may be
empower and
innovative
incentive.
programs around the country that are doing some of that, the Council of State Governments or some of those other organizations through PEMA contacts could share what they've been doing.
Yeah, we'll dig into that for that April 3rd meeting. So we'll try to talk to some of the national associations to see kind of best practices or innovative ideas, because I think that's part of what Ms. Kuski was going to talk about, and maybe there's others. Any other ideas you want us to start putting in the parking lot that we can kind of dig into a little bit more?
Just to further elaborate on the incentive
process,
there are probably two ways that could work. One might involve an actual subsidy for insurance. The other might involve grant money that might be available for stormwater management. But in each case, tie it to incentivizing municipalities to do what they need to do.
Anything in particular that you think?
Going off the senator's comments, and from an incentive perspective, it would be interesting to find out what are the impediments for municipalities not participating in the CRS to see whether we can incentivize that. What are the gaps? And is there any way that we can kind of leverage the participation in the CRS program?
I know we're probably doing that April meeting in Yardley, but we should really do it in New Hope. Kind of hit home the point.
When was the last FEMA map update on floodplain?
Yeah, the FEMA maps are updated on a continuous basis.
Yeah, the oldest ones in the state are from 2005 through 9, but they go through a cyclic period. They get reviewed continuously. So we just had a couple maps go. Columbia County is getting new maps, and right now Bradford County. So they go by region. Fortunately, FEMA used to look at it county by county, and it led to issues where a river crosses a county boundary and you have new data and old data discounted. So now we're doing it by watershed, but we can provide. I could actually provide the group with a list of kind of the current mapping projects that are on the horizon. The Juniata right now is being studied, Lower Ohio.
So that it's really a work in progress and ever evolving.
It is, yeah, and our funding gets cut every year. Everybody wants better maps, but with less money, and it's an expensive process. So there's a prioritization that goes in, and many multiple factors that they look at. Age of maps, age of development. If there's a significant disaster, they'll prioritize updating the maps if it looks like they were pretty inaccurate as a result of the flooding.
But there's also letters of map revision for areas, and for structures along Mars. There's some map amendments for structures that's going on all the time.
Yeah.
So it's outside that cycle he's talking about.
Was there any takeaways any member felt like we'd like to get from any of the presenters kind of as additional information? Trying to remember if we had any kind of homework assignments for anyone to give us some follow-up information. Because the tricky part becomes, now that we're a formed task force, we can't make decisions as we email. I can push information out, but for sunshine purposes, we can't have kind of ongoing discussion through emails and others. But if there's information that we thought was helpful today, obviously we'll post all of this information. I think we've already sent that out. But if there's any follow-up, we can ask them for that I can also push out to the group.
So, obviously one of the big challenges is affordability, and understanding, to the extent we can, get our arms around the scope of the affordability problem. I think you touched on a lot of the different statistics, and maybe drilling down and getting a better sense of what that really means for Pennsylvania, and how any solution we come up with, how it would address that.
And Commissioner Humphreys and I talked a little bit, and I know, Dave, you've been in these conversations, and I've had it with our staff, is that I wonder if there's any data that can be pulled from the 3 severe precipitation events we had last year. Taking a look at Northeast PA, Northampton and Bucks, and then also Berks County. Take a look at what, because I know, being on the ground there and talking to individuals, that anecdotally they're telling us that this individual could not insure to the value of their home, so they underinsured, but they've been significantly impacted. So it'd be interesting to see if we can pull any statistics from those incidents to say risk rating 2.0 is impacting people by this. They chose to underinsure. Now they were significantly impacted. So this is how, some of the unintended consequences of risk rating 2.0 and some of the other things that we're dealing with. So I wonder if there's any data that we can pull from those from the insurance perspective. I don't know.
I mean, I can tell you my own district office flooded in a shopping center that has never flooded before, and I had 3 inches of water down the hallway during that storm in September that likely came from maybe the parking lot or development downstream, but and they weren't covered for that kind of flooding because they never had it before. So,
and I think the other thing is beyond this task force, but the one thing that we talk about, we see, and we've had conversations about, is that insurance is one thing, but when we take a look at some of these events and what we're seeing is that building to the current code may not get you what you need. And there's going to be what we want to do is we want to try to make insurance affordable. But if we see what's happening in Florida, in California, and some of those other areas, the insurance market is backing out because of the high risk associated with that. And when we take a look at some of these events and impacts of these events, even if we build to the current codes and 2 feet above base flood elevation, is that getting us what we need for the next 20 years? And I bring that up because I was with the previous administration, Governor Wolf in Bridgeport, and there was a gentleman that owned a property down there, was flooded. He says, listen, I've been flooded before. I know what it's like. It was an apartment building. He says, I know when they say the river's coming up to this level, it's going to be in my basement, all this other stuff. He says, my concern is the lot across the street is permitted for 400 townhomes. He says that is in a special flood hazard zone. He says they will be built to the current ordinance which is 2 feet above base flood elevation, and almost all of those would have flooded in this flood. And that's the other thing. It's kind of beyond this task force, but it's something to kind of think about, that while we're trying to make insurance affordable for people that are in the floodplain, it's also, we take a look at it from a much bigger picture. And we know, like in Vermont, they do some things that are really innovative, where they look at parcels of land that haven't been developed or built on yet, and they buy them. So people can't build on them and make them green space. And I know that's kind of counterintuitive because people like to live on the water, but it's kind of it's a program that they've adopted at the state level, leveraging federal fund and also state funds to be able to do that. So.
Yeah. Do we have anything like that, even at like a smaller stage on the land use side, or
we
kind of buyout side?
Every county, our county has always had a very aggressive open space acquisition program, and where they floated bonds and then made the money available to the towns. And in many cases, the towns have done the same thing themselves. But we did it when I was a township supervisor. We did an entire inventory of every piece of property in the town that had not yet been developed, and we ranked it based on what was most likely to be developed, based on wetland issues, those types of things, all toward the idea that we would ultimately go and buy those. Now, subsequent boards didn't act very aggressively, but the truth is that town is mostly built out at this point. And so when we talk about development, many of the towns, the older communities, they're built out. So those types of low impact development ordinances, they can have an impact, but probably a little less impactful than some of the engineering controls or the stormwater systems that need to be either built or...
Can I clarify something on buyouts, though? There's a comment made here that on buyout property that they're allowing folks to build back on. When we do that, it's deed restricted. They're not putting anything that's not compliant with 44 CFR Part 80. So when we have to check every 3 years with the municipalities on, hey, that's still open space. So I don't, that I just want to clarify that. And we've been working with DCD with the Community Development Block Grant Disaster Recovery Funding to also deed restrict any property we're using HUD monies for that purpose.
Any other thoughts among the task force? Well, then I will thank again all the panelists for participating today. Really appreciate the discussion, and I think we're off to a good start. And just for anyone on the group, if you have other thoughts following today, feel free to send them through your staff, send them directly, send them through committee staff, who I know is here. And we can just kind of add them to the parking lot that we'll bring forward at a future meeting as we try to narrow down what those recommendations will look like. So with that, I think I need a motion to adjourn.
So moved.
Second?
Second.
Second. All in favor, say aye.
Aye.
Any opposed? Hearing none, we will stand adjourned. Thank you all.